This is Andrew Stotts of A Stotts Investment Research to talk about Singapore, which is cheap, has a cheap valuation, but it's cheap for a reason, which we'll see. The way I look at a country is broken down into 4 sections on this document. Let's look at the top left-hand section, which is GDP. We can see that the overall GDP of 1.81 is relatively slow compared to the rest of Asia. The strong drivers have been consumption and investments, and the weakness has been exports, mainly because of contracting imports. If we go on and look at the market overall, what we can see is a sad performance, one of the poorest performing markets in Asia. And what we can see is earnings fell in 2015 and are expected to have a slight turnaround in 2017, but nothing fantastic. The country is cheap on price to book, but that's kind of in line with the fact that ROE is relatively low. It's also one of the highest dividend yield countries in Asia. So if we now continue on to the FVMR or 4 elements framework, let's take a look at it and see overall ranking of attractiveness is relatively poor. ROE is below 10%. Of course, valuation is attractive. We've already just seen that price to book is about 1 times. But when we look at momentum, price and earnings momentum tend to be very weak relative to the rest of Asia. And then risk is moderate due to low volatility. So that's a positive factor. If we look at the overall market and sector performance, what we can see is that the top 3 sectors, industrials is 27% of the market, real estate 21%, and financials 18%. Now, of course, those sectors tend to be low PE sectors, hence the country has a pretty low PE and price to book. If we look at best sector in stock, well, consumer staples was up 5%, and the Thai company, Thai Beverage, which is listed on the Singapore Exchange, is actually the best performer, up 22%. The worst sector in stock, well, consumer discretionary was down by about 8%, and the worst performing stock was Jardine Cycle and Carriage, down about 19%. Want more? Well, get access to additional research and articles. Just sign up for free membership and a newsletter. Go to babinow.com/join. See you there.